Great day for stocks. Equities making fresh highs on the back of big tech, but different in the category of risk. If you go to crypto world where things are getting hit, joining us, Phil Streible of Blue Line Futures for his Friday hit. Sir, great to see you, Phil, on a Friday as always. Happy 4th. I'm trusting that you had a good day yesterday, a very American day.
Oh, yeah, the commodity to be long is aloe because I am so sunburned right now. It's crazy.
All right,
so,
lucky you. All I got to say, on the coast. But, hey, it's pretty hot here in Chicago, too. Can't complain. It's pretty cool, though, in the world of crypto. What's up?
Oh, I know. I mean, since that June 24th sell-off in Bitcoin, I mean, that's what really triggered the shorts and the bears really came in and it kind of entered into a bear market. We broke below the 50-day moving average and we also broke below the May 1st low, which is about 57,500-ish. Now, a lot of this liquidation is something similar to like the FTX. What I'm reading is that Mt. Gox is finally that was that crypto hack that happened over 10 years ago. You got about 95,000 Bitcoins being returned to people. So can you only imagine that if your crypto wallet was hacked with a bunch of Bitcoin at a couple $100 a Bitcoin, and then all of a sudden 10 years later it gets returned to you, that's life-changing amount of money. Even a couple of coins could make a big difference on someone. So True. I think that those people are liquidating right now. It's not necessarily the creditor liquidating like what we saw with FTX, but these are coins that are being returned finally to people.
So you don't think the people that got hacked and screwed by Bitcoin 10 years ago are full of belief today to hold on to it?
I got to tell you, I mean, it's like finding a Mickey Mantle baseball card.
Yeah.
Dude, man, you liquidate it. Right. I mean, it is what it is. So baby's going out with the bathwater. All the cryptos are going lower at the moment. So I think that this does present an opportunity, especially if like risk assets like the NASDAQ, the dollar index is going to roll over, treasury yields across the board are going to come off a bit. Could be a good opportunity there for someone with a long-term perspective.
Well, that's kind of where it still seems like an interesting move to me because with all the ETF hype and all this narrative that the Fed's going to be forced to cut coming up this year and Trump's going to win the election, he's like super pro Bitcoin, all this stuff, it's like, well, where's all the Bitcoiners buying up this stuff that's getting sold out of Mt. Gox people's hands, right? Like, what happened? People just run out of cash on the sidelines in crypto world? Are they buying too much Joe Biden coin or something, or what?
Right. I mean, I just think momentum has shifted to other things. We're seeing this economic breakdown. With Friday's employment data, 206 versus the 191. But if you look at the devil in the details, 70,000 of those were government jobs, only 136 private. The unemployment rate ticked up, highest level since 2021. Prior 2 months revised down 111,000 jobs. So you look at that interest rate cut, 77% chance in September. Swaps are pricing in 2 cuts. So, it's just this big breakdown as far as like the economy and employment and things like that. People are going into other asset classes. And that's where you want to go into things like the NASDAQ and you want to be short things like the Russell.
Okay. And it really is a pretty big difference depending on where you are in the category of risk assets, right? Crypto's been the worst performer. You've got the equal weight, non-tech stuff that's just kind of like lingering, hovering. And then you've got the rippage elsewhere in tech. What about gold, which is kind of like creeping higher again? I mean, is that more kind of fitting the economic situation that you just described, that weakening?
Definitely the labor market deteriorating. That's been the thing that the Fed has been pivoting on most. So you get that deterioration in the labor market. All of a sudden, you get the dollar index breaking below the 50-day moving average. 104.50, I'd say, is the line in the sand. It's really a 2-day rally in the gold market. It was Wednesday and then also today. Remember, we had that weaker ADP, that uptick in initial claims. So the labor market is what's brewing in the background. Gold up 2% on the week. I think for me, probably the line in the sand, if we took out today's low, like early next week, so we break back below like 23.50, I think you got to be a little bit hesitant, maybe go back to the sidelines on the gold market. We break below 23.10, I'd say that the party's probably over again, and we're going to be rolling over. But the way the foreign currencies are setting up, the way that the two, all the durations of treasury yields really came off today, I think gold's in a really good spot at the moment, and other metals are participating like copper and silver.
Yeah, love that analysis as copper woke back up again. I don't know if there was a story attached to that, but to your point, I mean, it just kind of seems like that category is heating up.
There's actually like a story I saw floating out there that was saying that like some of the exchanges, they need to like secure some of the inventories, and the boats are delayed, that are delivering these inventories. So I saw something that was really kind of it's good Saturday reading is what it is. So
Nice.
yeah, but like I said, all these commodities turning up. I mean, the copper has this Nike swoosh type chart, and that's what I generally look for. Stochastics rising from oversold territory, DMI plus crossing over minus. You get the Nike swoosh. That way you got an easy place for risk management. You either buy a put below the low, or you put your stop loss and you try and trail it as it comes up. Soybeans have almost a very similar chart pattern to copper. And one thing to note is that like the Australian dollar broke out to the upside. A lot of these things are interconnected with China. China is going to report their PPI and CPI data Tuesday night into Wednesday, so it's going to be something to keep an eye on.
Nice, good stuff. Love that. We kind of lost track of the China pulse over the last week here. It got very domestic focused, but definitely an important story, especially because crude's been looking pretty good too. So you get copper to join in, and then suddenly you've got like a full-on commodity rally.
Super cycle is back. Commodity super cycle. Get the shirt.
That's the next one. We're going to get that printed. Here for the super cycle. All right, nice. Thanks, Phil.
Have a great weekend.
You too, sir. Appreciate that. Phil Streible, Blue Line Futures. All right, of course, the main commodity, though, sunblock for the summer. All right, okay, coming up. Our big picture discussion. Mr. Joe Mazzola joins us to go into the bell here. Russell's got a long ways to go, but everything else is in good shape for all-time highs.